Welcome back, everyone. This is a brief update on news from the oil market. Oil prices performed a comeback and moved higher yesterday, providing further hopes for the commodity to gain back ground it lost throughout January. Traders were satisfied to see the commodity rise, yet the reasons driving its price deserve a closer look into. To start with, according to various reports, the OPEC Plus group is currently in the midst of a prolonged meeting in order to form decisions on further output restraints. We say prolonged as the meeting was supposed to come to an end in the previous days, but analysts claim that the group has not reached a final decision and further factors may need to be considered today. The group's meeting is based on the potential negative impact of the current coronavirus outbreak may have on the oil market. Fear and uncertainty over the matter could reduce oil demand substantially, forcing the group to reconsider its future production activities. Furthermore, the meeting could be prolonged as some members like Russia, one of the leaders of the OPEC Plus group, could be opposing further production cuts recommended by others and would rather prefer an extension of the current deal. Even though nothing official has been announced for the time being in the past, the OPEC Plus group has managed to form unanimous decisions on production levels, and so we expect it to make an announcement very soon. The release of the OPEC Plus group decision may create volatility for the commodities price, and so caution is advised. Nevertheless, in our view, any outcome is possible, as the matter emerged rather unexpectedly, putting the group in a position to make complicated decisions. On a separate note, the weekly readings on oil stocks from the US proved to be similar this week, with the EIA indicating a buildup of plus 3.3 million barrels and the API reading indicating also a buildup of plus 4.2 million barrels. Even though WTI prices should have taken some downward pressure from the pre-mentioned releases, the commodity price rose on the session after various reports surfaced referring to a possible development of a vaccine to fight back the coronavirus. Oil traders may have been particularly interested in the news, as some of the reports released previously had indicated that global oil demand could be reduced by 300 to 500,000 barrels per day if the virus continues to spread. On the other hand, if a vaccine is formed on time and China's economy is not impacted as much as expected, oil demand could remain stable or even increase, and so the news of a vaccine could be viewed as positive from a buying perspective. As a conclusion, some analysts expect that since Asian demand for oil may be lower in the coming weeks or months, the US may increase its supply to Europe as a way to cover for any potential losses. One of the companies that could benefit from this process is ExxonMobil, looking to ship cargoes to Europe. The company's stock price may need this kind of news, as it has been in a downward trend for some time now. That's all. For a more in-depth investigation, please refer to our written report, which also includes technical analysis. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. This is Angelos Zitis from IronFX, wishing you solid trading.